Pankaj Sharma is head of equities at Equirus Securities. He's joining us on a 3G unit from Ahmedabad. Pankaj, good morning. Good to have you back on the show. Thanks very much. Seems every time we chat, the market's seen another leg down, Pankaj. How bad is it looking, or is there some semblance of stability you expect to return?
See, I think unfortunate part is that we are getting a lot more influenced by what's happening around the globe. So this might mean that the influence of a potential slowdown in China, hard landing there, what happens on oil, what happens on US Fed, the rate increase they would do over 2016. I think all these factors are influencing the markets a lot more. Again, unfortunate part is that we are not seeing any significant support which is coming from the local factors. So we have, like as usual, the jam on GST and the reforms. We are again seeing that the banks issue keep cropping up again and again. While the corporate earnings have not been that bad in third quarter, but some of the large caps reported very, very bad numbers. And since they got a lot more weightage in indices, this really impacted the markets a lot. So overall, I think I don't think it's going to change that much very quickly. At least in near term, next 3 to 6 months, the global factors would continue to influence the local markets much more than what's happened in India.
Right. And of course, that is very, very tough to say, right? Which way things are going to go there. But for a viewer who's watching this program, Pankaj, how would you describe? How would you describe it? What should be? There are so many moving parts, so many variables, and more variables get added to the mix every day. It would seem, or every week rather, right? You watch the Baltic Index, you watch what's happening to,
Right.
port traffic. Some of the, rates, dollar, 100 things. To your mind, what are the 2 or 3 things that will hold the key?
Right. See, I think first thing which an investor has to look at, what is the investment horizon he's working with. So if he's working with, let's say 3 months or 6 months, definitely that's a very, very difficult call to take for anyone. But if you are expecting a 12 months plus kind of investment horizon, definitely these market levels are not bad. Of course, in terms of what could influence the market, I think the most important factors would be the expectation on Fed. If the proposed or expected 4 rate hikes, which we are going to see in 2016, if that number is lower, definitely that would be a support for the market. And more importantly, I think what we have to see is that what happens on the local factors, like how quickly the expenditure revives, what we would see in budget, is there a very strong intensive effort from the government to push the reforms, and if an investor can take a decent enough call on those factors, definitely it's not going to be a very, very big and important challenge what happens on the global factors. Because if you have a 12 months plus kind of investment horizon, you would be more focused on what happens locally and what happens in India. And for that, you need to see what happens on the expenditure side, how good or bad the budget is, and how quickly we can push reforms.
Some have said that, so you're saying in the near term, it's kind of hard to say. In the medium to slightly longer term, it's easier, right? If you have time on your side. And maybe that is true. But some have put that logic on its head and have said that actually in the near term, because of this extreme selling, you might see a bit of a rebound. But the medium term actually looks very difficult now. What is medium term? 6 months? A year? Right? That looks very tough now. Would you agree with that, or would you disagree with that?
I would disagree, because I think what happens on, let's say if you look at what happens in near-term fluctuations, and if I bifurcate the influencing factors into 2 parts, one is that what happens all over the globe and what happens locally in India. If I have to look at near-term, it's very, very difficult to see that weightage in favor of local factors. But if I see that 12 months plus kind of horizon, definitely the local factors would influence that a lot more. So while it might be true that there is not going to be a significant change in near term, it's very much possible that we see the kind of changes which government is planning to do and all this, whatever we see in terms of reforms, if that is on track, definitely for a longer term investment horizon, local factors are going to be more important, and where you would be able to take a call much more easily. Because honestly speaking, what happens on oil, what happens in China is anybody's guess. Very difficult to really forecast. And of course, you would have a view and I will have a view and everyone would have a view on these things. But unfortunately, it's very difficult to say what's going to happen in China, what's going to happen in crude, what happens in commodity cycle. All that is a very difficult forecast to make. And that's why I think that for a longer term investment horizon, medium to longer term, that view, if you are taking, local factors are going to be more important, and that's why you would probably be in a better situation to take that call.
Okay, fair enough. Let's get to stocks now, Pankaj. Right, and before I get to what you really like, I want to talk about what you don't like, right? That's, I think, an easier call to take, what to avoid. So there is BHEL, L&T, Crompton. Crompton, by the way, is cracking again. I think it's down some 8-9%. Just talk us through this this pack, BHEL, Larsen, Crompton, the pack.
See, I think, Prashant, if we look at the entire cap goods space, I think the unfortunate part is that these companies are a lot more dependent on what happens on the expenditure side. And if you look at the private capex is virtually not moving, and we have not really seen any kind of revival in that. In fact, whatever data we are getting, just a week back there was a RBI survey which talked about the capacity utilization, the inventory levels, and the new orders, and virtually everything was very disappointing. We are at capacity utilization of virtually 70%, which is much lower, and since the time RBI has been tracking that, is the second lowest point out of the 14 data points we had. Similarly, there is no significant pickup on the order inflows. Inventory is not moving that fast. We are seeing a lot more inventory buildup on the finished goods sides as well as raw material. So nothing as such is happening which is called too positive for the revival of capex, at least on the private side. So now the responsibility comes to the government, and when the government expenditure has to be looked at, it would be very much dependent on what the government plans to do with the public sector undertakings and other areas where they would focus on, like rural. And if we look at the benefit of that capex for the companies like L&T, for the companies like BHEL, Crompton, it is very much dependent on that overall capex picture. And unfortunately, that doesn't look too great. And especially in cases like L&T, you are seeing that a meaningful part of their business, almost 30%, is dependent on outside India, where commodity cycle and crude is playing a much larger role now. Some of the reports which we are getting, some of the people we talk to in Middle East, the feedback is very very The overall sentiment is really very bad on the capex outlook there. Similarly, if you look at some of the areas where we are seeing the pickup in government related expenditure in India, like what you're seeing in roads, etc. These are typically areas where there is a lot more competition. There are more players, there are more efficient guys locally who can give a strong competition. So overall, because of the diversified nature which L&T has, at least for the stock, things don't look too great in near term. BHEL story is slightly different in the sense that you are seeing what's happening on the power capacity. Of course, there are a lot more initiative government is planning to take, and there are schemes like Uday, etc. But the focus is somehow more on the renewables. The focus is somehow more on the last mile connectivity, which is the distribution reform. So really, there are not too many people bothered about what happens in the capacity addition, which is the core business for BHEL. So I think overall, because of the very negative capex outlook, we don't like these stocks too much.
Okay, fair enough. Now that's a nice wrap up. Let's talk about stocks that you really do like, right? And we've discussed some of them the last time you were on the show, right here in our studios, Pankaj. Let's start with Coal India. Now, Coal India finds itself in a strange situation. It, by the way, it also does get hurt because of this entire push on the renewable front. Of course, but that will take a long time. Nobody is moving capacities en masse right now, from coal-fired plants to renewable energy type sort of power generation. But anyway, the move is in that direction. For Coal India, the immediate pressure seems to be too much output. It's producing too much. And I was reading that there are actually storage problems. So now either Coal India will have to cut prices or cut output. So what's the logic here?
See, I think it's dependent on what happens on the overall consumption of coal because of the two problems. Like you are seeing that the coal-based plants have a capacity utilization which is on the lower side as of today, and also the broad economy is not doing well. So the demand is impacted. But if you look at the pricing, I think overall pricing is, apart from the e-auction segment, the pricing is more or less protected. And still Coal India supplied coal is one of the cheapest and one of the most efficient solution for many of these consumers. So while you are right that there would be a problem in terms of overall consumption and overall demand if that gets impacted, but typically what we see is that we are at the bottom of the cycle. Large part of the coal which is used by power industry, I expect that in next 2 to 3 years that would get better, because you would see the impact of reforms which the government is doing, and the utilization of power plants would go up, especially in the coal segment. Also, what would see that if you see the broader capex which is currently stuck, if we start to see a higher capacity utilization, even while we don't see any new capex, the demand for coal would be better. But if this situation doesn't change, I agree with you that this is going to be a very difficult challenge for Coal India, but I really don't expect this to play out like that. I expect that in the next 2 to 3 years, there would be a more demand and there would be a positive sign for Coal India in terms of how the output it produces would be consumed. And the second part is on pricing. If you look at, as I said, that e-auction prices are very closely linked to the global markets, what happens on the imported coal prices, and on those prices also, if you see that we are currently at a level where it's unlikely that the kind of impact which we had seen in last 18 months, the same impact would be there for next 18 months or next 24 months. So if you are seeing a very, I would say, a bottom of the cycle on pricing as well as on the demand side, going forward, it only can get better and nothing worse can happen for Coal India as such in next 18 to 24 months as such.
All right, fair enough, Pankaj. So that is Coal India. It would figure as one of the top bets right now, Pankaj? I mean, absolute in the absolute sense? One of the first things
among the large cap in the large cap space, this is the stock which we like a lot, and it is among the top picks we have in the large cap space.
Yeah, okay, fair enough. Let's get to Torrent Power and JSW Energy. I remember talking to you about Torrent Power, and Torrent Power has done very well over a period of time. You still like the name and you like JSW Energy as well.
Thank you.
Yes,
all credit for my power analyst, Devam.
Okay.
Yeah. So Torrent Power has done very well. All credit to my power analyst, Devam. He has taken a phenomenal call on this stock. The stock has done very well. And I think the fundamentals are still in favor, because if you look at, as we discussed last time around, that there are three very important things for the stock. And if you look at all those things, one is the regulatory circles which they have, Ahmedabad, Surat and Gandhinagar, they are doing very well. There is a lot of recovery which is happening on past dues. Second is that utilization of their power plants is going up, and you are seeing more visibility on that because of low gas prices, and it has become more affordable for consumers. And third is that the distribution franchises which they have, like Bhiwandi and Agra, these franchises are doing very well. So overall, we think that the fundamentals are in place and they are going to get better. Still, despite the fact that the stock has done so well in last few months, the valuations are not stretched. We are currently at about 1.3 times price to book. And if you look at the balance sheet of the company, if you look at the financials, I think it's very reasonable, because one of those companies where we didn't see any aggressive expansion on capacity. There was only a problem in terms of gas availability, and that's why they suffered. But otherwise, there was a very, very conscious and very, very well thought out effort to add capacity wherever they saw the right opportunity. They were not in a mindless race to add more capacity. And that's why I think that current valuation levels are very, very attractive. I expect that stock should continue to do well because of the fundamental reasons and because of the valuations which are very, very attractive. On JSW Energy, I think it's because of the fact that you are seeing very low imported coal prices and the demand is picking up, especially in the southern region where it has a lot more exposure. Also, the situation which we are in today, there are many plants which would probably be acquired by existing players in next 2 to 3 years because the current operators and current project guys are not able to manage them. And in a situation like that, JSW Energy is much better placed. So there is always an expectation that whenever there is something that is going to be sold cheap, some of the guys who are better off in balance sheet would be able to do that and would be acquiring those plants and those projects. So I think because of factors related with the low coal prices, imported demand pickup, and a balance sheet which is really in that shape where they can look at some of these acquisition opportunities, I think JSW Energy should be fine. Also, the valuations are also not very, very stretched. They are doing a decent cash flow generation on the existing plant on a quarterly basis, so things look fine for them.
Okay, fair enough. Let's get to Reliance Industries. Pankaj, what will act as a trigger? Because I think it needs some sort of a trigger here. Yeah.
See, I think that the trigger could be that in next 12 months we would have more clarity on what happens on the response to its telecom services. The Reliance Jio would be rolled out, and we would expect that in next 12 months we would have more clarity on how it is doing. I expect that for some time now, the expectation is that it would be very, very bad for the existing telecom players, but people are also not very sure whether it would be good or bad for Reliance Industries. So if they do a good job in the market, they are able to generate good traction, their service standards and customer service is good, I see no reason why they should not be doing well on Reliance Jio. And because of the size which they have and because of the network which they have built for these services rollout, I think they would be a very, very important player in next 12 months. And if they take the basics into consideration, like efficient customer service, I have no doubt on pricing, they would be very, very competitive. But if they are able to take care of the customer service part, I think it would be a very strong competition for others. And the kind of scenarios which people have built in where there is virtually no value people give for their telecom business, I think that part would be better. Most of the people would be negative in terms of the capacity which has been expanded in telecom, the investment that has been put in, but I don't think that is going to be the case. If it plays out well for them, people would get definitely more positive. And also you have very strong tailwinds on the core business. You are doing well. They have one of the most efficient and best refineries in the world. And with situation like what happens on Iran, more crude coming from there, I believe that it's going to be a very, very good time for the core business, and some of the concerns on telecom would be taken care of.
Yeah, okay. You have other stocks as well. We've discussed Coal India, Torrent Power, JSW Energy, Reliance Industries. Pankaj also has Britannia, he likes Triveni Turbines, Infosys, Sun Pharma, Ashoka Buildcon, amongst other names. So if you can put these stocks up. Yeah, there you go. The names are on your screen. Unfortunately, we don't have time to discuss all of them, maybe next time. But I just want to get your thoughts on the, Pankaj, the deal which was announced yesterday, the Reliance Infra Birla Corp deal. Any thoughts? Do you track any of the two, or any thoughts you might have?
Yeah, I think this is, of course, Reliance Infra is the company which I have been tracking for a very long time. I've looked at this company for last almost 10 years. I think it's a very, very good and positive sign for them, because there has been a lot of expectation in the market that the company would be very, very serious about monetization of assets, and wherever they see that the core business is not aligned with the diversification which they did in last 8 to 10 years. And cement is a very important part in that, because cement was definitely not very aligned to their core business. And if they are able to sell that at a price which is very reasonable, I think it's a very, very good thing for them. And Reliance Infra, I expect that if they continue with this kind of initiative where they would look at their assets very, very closely and critically, if they are aligned with core or they are non-core, and they continue to monetize them, I think it would be a very, very important trigger for Reliance Infra and should help them.
Okay, fair enough. We'll leave it at that, Pankaj. Thanks very much. Good speaking with you. It's a pleasure always.